In this video, we're going to talk about the principles of trading, some of the fundamental truths that you have to understand and believe in to be a successful trader. So here are some of the basic theories of trading that you really need to believe in to put yourself. So here are some of the basic theories about trading that you really have to believe in to put yourself in the best position to be able to take advantage of the market moves. If you don't believe in some of these statements here, it's going to be very, very difficult for you to be able to profit from some of the moves and the potential opportunities that the markets present you later on. So the first is that when all the variables have been taken into account, the end result is the price. Now remember, I said to you in a previous video that ultimately the price is the truth. The price is the sum of all of the market participants' views at that particular moment in time. So we have to believe that the chart, the financial chart that we look at, represents the truth at that one particular moment in time. So when all of the variables have been taken into account, the news, the volatility in the market, the liquidity, all of that kind of good stuff. At that moment in time, the price is the truth. We also believe that price action moves in trends and that these trends require significant change before a reversal can occur. Now, there are different types of traders. So there are some of those traders who do like trading range-bound markets, that like trading consolidating markets. We prefer to trade trending markets. And with that in mind, our belief has to be that trends will continue. So we believe that out of every single consolidation, the trend will continue in the direction that it just came from. So if you're in a strong trend, something quite significant needs to happen for that trend to change direction and to reverse itself. And with that kind of view in mind, and that view at the heart and the core of all of our trading, that's what puts us in a good position to be able to profit from the price moves. Now, I'm not saying that any one is right or wrong. I'm just saying that for our type of trading, which is swing trading, trends in a trending market, if we don't believe a trend is going to continue, then we have a problem taking the next trade. Okay, do you see what I mean? So at the core of our belief for our trading is that price action moves in trends, and these trends will continue. If it's a strong trend, it will continue. It's not just going to reverse, tomorrow because of one news announcement or something like that. It will take something significant to make the trend reverse. We also believe that traders will behave in the same way to price developments today as they have done before. And the reason that's so important to understand is we are trading patterns. Okay, and patterns can only occur if the market participants do the same thing over and over and over again. Now, fortunately, we're human beings, and human beings make the same mistakes and make the same decisions over and over again because that's what's drilled into us from a very, very young age to believe. Greed, fear, all of that kind of good stuff is inbuilt into us. And unfortunately, it takes a lot to change that. And for that reason, we will see reoccurring patterns in the market. And those patterns that happen again and again and again are the things that we will take advantage of. Now, they don't work every single time because, as I explained to you in a previous video, there will be times when you have different market participants acting on different profit motives and things like that. But for the majority of the time, if we find a reliable pattern, a pattern that's based on solid fundamental principles, then they should work more often than not. And if you're taking bigger profits than you're taking losses when you lose, then you put yourself ahead of the game. Okay, it's our human nature to experience the same emotions when winning or losing money in the market. When we're making money, we're scared. We don't want to give that money back, so we take profits too early. When we're losing money, we don't want to admit we're wrong, so we'll sit in a trade for ever and ever and ever until the market, a small loss, turns into a big loss. Okay, and ultimately, it's the predictable nature of these reactions to the different market opportunities that presents those patterns in the markets and presents those opportunities for us as traders, the disciplined trader, to be able to make the most of it and to take advantage of those opportunities and indeed make money. So we have a few rules to succeed. Now, these aren't the rules of our trading system. They're just general rules about any trading system that you approach. The first of that is to identify low risk entry points. Risk is the only variable we actually have control of, and therefore that's the one that we need to protect the most. We need to make sure that we are in the markets tomorrow, the day after, and the day after to be able to take advantage of the trading opportunities that present themselves. Okay? And when I say identify low risk entry points, that means, taking the entries where it just makes so much sense. We've had a lot of students in the past who have struggled a little bit until they've really grasped this concept. Once we talk to them and say, you don't have to take every trade that's out there. Why not just take the best trades? Why not take the trades that just scream at you to the point where you have no choice to take it? And when they do that and they start to filter out some of the less than perfect trades, let's say, that's where they start to turn the corner. That's where they start to make money. The other thing you need to do is quantify the risk and then accept it. Now, a lot of traders will say, well, once I've put my stop loss on, I've already quantified it and I've accepted it. That's not really the case, if you're honest with yourself, because once you put your stop loss on, you're still kind of hoping that the trade makes you money, or you are hoping. You're sat there, you've put your stop loss on, but you really don't want the market to hit your stop loss. You want the market to roar off in your direction and make you money. And if that's the case, you actually haven't accepted the risk. So you need to learn to quantify the risk and then accept it. That money's gone. Okay? And then just wait to see what the trade outcome is, win or lose, and be happy with that trade outcome. Only trade high probability setups. This kind of goes to the first point that we just mentioned. You don't have to trade everything in the market that moves. You really, really don't. Just trade the setups that are the best setups, that scream at you. You have no opportunity but to take that particular trade. There's no decision to be made there. They're the sorts of trades that you want to take. The trades where you're kind of umming and ahhing and you're thinking, well, does this make any sense? Should I take that? Should I leave it? That trade, you pretty much know that if you're thinking like that, don't take it. Step aside, wait till the next opportunity. You also want to have a positive risk reward. Now, this isn't always possible, and indeed in some of our trading, we actually trade with a risk reward which is about equal. So for every one we risk, we have the potential to make one. But where you can, if you can trade with a positive risk reward, which means that if you're risking, let's say, £100, your possible reward is £200 or something like that, then if you get a system that's even 50% right, so right 50% of the time, you will come out ahead of the game. You will come out up massively. Okay? But that's something that we'll talk about a little bit later when we get to the money management. This is just something you want to keep in mind for now. And lastly, we want you to apply rules systematically. Now, trading isn't a science. Some of it is an art, so you will need to learn to read the charts and all of that kind of good stuff. But once you understand how to read the charts, you then need to learn how to apply your rules and execute your trades according to your plan systematically. You can't be thinking about what's going on in the markets. You can't be second guessing yourself or anything like that. You need to learn to see an opportunity, take it, execute the trade, put your stop in the right place, put your profit target in the right place, walk away and be done with the trade. Okay? When you can get to that point, that's when you know you're making some really, really good progress. You also need to be patient with your winners, but impatient with your losses. Now, what does that mean? That kind of goes back to the risk reward that we were talking about just now. We want you to be patient with your winners. Give your winners time, give them space, let them make you more money. But when you take a loss now, if that starts to prove you wrong, do not be patient with it. Be impatient. Cut that loss. Get rid of it. There's always going to be another opportunity around the corner. And your job as a trader is to protect your account. So if you're in a losing trade and it's violated your stop loss, make sure you execute that. Okay, do not move your stop loss. Do not negotiate with yourself and say, you know what, actually, this trade kind of makes sense. I'm going to sit in it a bit longer. If I just move the stop behind here, then perhaps it will turn around. That is the quickest way to financial ruin. And I know this because a number of our members have acted that way, and we tried to warn them. And unfortunately, it takes them to understand this lesson the hard way, and then they make the right decisions, and then they turn the corner. But please do yourself a favor and don't learn this the hard way, and just listen to us. We also want you to learn to trade with a view. Have a general market view. This can be fundamental, it can be technical. But ideally, you want to have a view. You want to be trading either with the trend or against the trend, whatever it is that you believe in, it you want to do, have a view, okay, and stand behind it. Fortunately, we've got some technical indicators which we will introduce you to later, which will help you form your view on the markets. Now, another one to remember, which kind of goes to the being impatient with losses, is markets can remain irrational much longer than they can remain solvent. Now, over here we have LTCM, which is long-term capital management, which was a massive, humongous hedge fund in the US, which ultimately went underwater because they were holding positions much too long, and in the end the market got the better of them. Okay, they were trading a mean reverting system, and ultimately that means that they always believe that price will revert to the mean, and in this particular instance it didn't, and it didn't, and it didn't. And after a while, they needed bailout, they needed saving, and ultimately they went underwater. So that's something you really need to understand and appreciate with your trading. The markets can remain irrational much longer than you can remain solvent. So cut your losses. Do not negotiate with yourself. Do not be patient with your losses. Get out of them. And remember, trading runs in cycles. Okay, we would like it to be as consistent as you win one day, you lose the next, you win 2 days, you lose the next, you win 2 days, you lose the next, and that kind of a pattern, but it's just not the way trading works. Okay, you're going to have good periods and you're going to have bad periods. That's life, that's trading, that's the markets. There's nothing we can do about that. So what you have to remember to do is maximize the good times. Take advantage of the times when you're making money, and then when you're going for a bad patch, then kind of dial back a bit. All right, but ultimately maximize the good times. And keep it simple. You've probably heard the term paralysis by analysis. That means that you throw way too many indicators on your charts. You've got too many things kind of contributing to you making a decision, and you actually end up never taking a single trade, because you know what? You're doing way too much analysis, and when it comes down to it, none of it makes sense. Okay? So what you need to do is keep it simple. The systems that we teach you throughout this course are systems which are simple in nature. Yes, you need to read price action. Yes, you need to get a feel for how the markets move. But once you've done that, then the decision-making process is very easy. Okay, you follow some rules, you make a decision, you take the trade, happy days. All right, so please don't throw millions of indicators on your charts, all to kind of one to back up one thing, and then this one to back up that, and then this to confirm this, and so on and so forth. And it gets to the point where you've got so many indicators there, you're never actually in a trade. Okay, and that's something known as over-optimizing as well, and we'll talk about that later on. And finally, we want you to appreciate that you have two sources of capital. You have your monetary capital, the money that's in your brokerage account or your spread betting account, and you have your mental capital. Now, even though it's important to protect your monetary capital, of course it is, your mental capital is by far the most important. Because if you don't protect your mental capital, which is your mind, what's going on inside your head, then it doesn't matter how much money you have, how much money do you have in your account, you are doomed for failure. If you lose your mental capital, you will start to make mistakes, you'll make stupid decisions, you'll take stupid trades, and you'll end up blowing your account. Okay? But we will talk about this in great depth later on in the trader psychology lesson. Okay? But just for now, bear in mind that you have two sources of capital, your monetary and your mental capital. Now, even though both of them are important, in some ways, the mental capital is by far more important. Okay? So again, that wraps up this video. They are our rules for success. They are our principles of trading that we believe and we go by and we live by every single day. Please see if you can do the same, because I promise you, in the long run, this will make you money. These rules here, this belief in the markets, the way thinking about the markets the way we do, that will make you money in the long run. Okay? Thank you for watching the video, and I will see you in the next one. Take care.